Stocks down first month of 2009. Stock losses could set the tone for the rest of the year. As January goes, so goes the rest of the year. Market historians have observed for decades that when stocks fall in January, they tend to post losses for the rest of the year. With the Dow-Jones Industrials and Standard & Poor's 500 losing 8.8% and 8.6% in January, respectively. Their worst start to a year ever. Again, their worst start to a year ever. Followers of the so-called January-Barometer are hunkered down for the worst. We're hoping it's wrong, said the editor of the Stock Trader's Almanac, which popularized the January-Barometer in the early 1970s. Nevertheless, we do have a negative January, and that's something to be very concerned with. Consider this. The January-Barometer has frequently been correct. Since 1950, it has been wrong by a wide margin only 5 times, says the Stock Trader's Almanac. Investors who heeded the warning last year avoided much of the 2008 downward spiral. The S&P 500 declined 6.1% in January 2008, a year it ended with a 38.5% loss. The biggest down years started with a down January. Every year, the Dow fell 15% or more since 1973, started with a negative January. This captured every single time hell broke loose. The indicator has reliably predicted mid-year corrections and below average years back to 1928. One factor in support of the barometer is that a down January means stocks have to crawl out of a hole to end the 12 months higher. Also, many of the government policies that steer markets for the year are made known in January, says Brian Taylor, market historian at Global Financial Data. Still to come of the Obama administration's plans or stimulus package for aiding banking and housing. Stocks have fallen 2 consecutive Januaries, only 5 other times since 1929, and in 3 of them the market gained the second year. Yes, and once again, these are more signs of the times. There's something going on with the economy, something like never experienced before. Something else is going on here. Macy's has announced that it will cut 7,000 jobs. The Macy's news underscores the nasty nature of the recession that is now more than a year old, a deepening worldwide recession. Just last week, companies around the world announced more than 100,000 layoffs in 1 week alone, and new home sales in December dropped to an annualized rate of 331,000, their lowest level ever. The malaise translated into the worst January ever for the Dow and the S&P 500, and the third worst January for the Nasdaq. Again, the Dow dropped 8.8% for the month, the S&P fell 8.6%, and the Nasdaq fell 9.3%. The Institute of Supply Management's Manufacturing Index inched up to a reading of 35.6 in January from a reading of 32.9 in December. Still, January's reading marks the 12th straight month of contraction in the manufacturing industry, indicated by readings below 50. Automakers will be reporting January sales, and they're not going to be good. And still we see stabilization in the housing market and job market. We're not going to see a real rebound in car sales. General Motors, for instance, could face a $7 billion income tax bill, the Wall Street Journal has reported, in connection with the automaker's plan to give most of its outstanding shares to debt holders, the United Auto Workers Union, and the federal government. And economists expect the Labor Department to report that the economy shed at least 530,000 jobs last month, in January, the 13th monthly decline. The unemployment rate is expected to have jumped to at least 7.5%, the highest level in 16 years. The U.S. economy lost 2.6 million jobs in 2008, the worst year for job losses since 1945. And the greatest losses have come in the past few months. Again, the economy shed 524,000 jobs in December and 584,000 jobs in November. The door is closed on 2008's terrible employment record. But 2009 is starting off the year looking just as bad, if not worse, said an economist for CIBC World Markets. And once again, there's something more going on here, something bigger in all this. It is a worldwide economic crisis, climate change crisis, political instability crisis. Many crises are going on, and all these things are connected to each other, which in turn is connected to the end times, transition days, and all these are more signs happening every day.